All right. Well, hello and welcome everyone to your weekly midweek currency room. This is Sonkit here. And as always, we'll be breaking down markets and take a look at how things are moving along and most importantly, plan ahead. We are in this final stretch of this year. And also, December is always an important month because we are kind of winding things down and we're looking at some seasonality patterns. But we also have less of a time to work with because especially if you look at the schedule so far for December this year, because the New Year's and the Christmas kind of falls in the middle of the week, we just really don't have a whole lot to work with in the last 2 weeks of December. So it's all going to come down to this first half of this month is where all the movement's going to happen. So let's go ahead and take a look at markets from a top-down analysis, take a look at what's happening in the broader market, bring it down to currency baskets, take a look at the news reports, and then we'll get into setup. So let's get into it.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader?
So getting with the market analysis, let's just jump right into the headlines and the numbers. And overall, I must say that it's been a pretty choppy week so far. We start off the new month, but then if you look at the broader markets, seeing a lot of choppy price action, a lot of back and forth. We're looking at also the US dollar. Really, this one came out of a surprise because dollar has been holding it a lot better in the last 2 months, especially starting October or late September is where we saw that dollar made a big turn. But now we're seeing some weakness coming in. We'll discuss that shortly when we get into some charts. And then also, small percentage moves across the board. Remember, this one thing I emphasize a lot on is look at the percentage move because that's really where it becomes more lucrative to be in those moves. When things are moving in a small percentage moves, we're just not really getting a whole lot of bigger gains. And sometimes you need those big runs, and right now that's not really getting that. You can see everything is kind of below the 0.5% range. So that's a small percentage move. One thing that we did notice is the growth currencies that we talked about last week is still outperforming. Even though we're getting that a lot of back and forth in the broader markets, is also moving the Aussie and the Kiwi back and forth as well. But overall, I must say that they're holding it a lot better. Now, the CAD and the USD was the surprise because we both were looking better. And now the dollar's actually kind of trending lower here. So we'll take a look at that one as well. Then when it comes to the European currencies, and you can see that not a whole lot. Swiss franc remains the weaker currency, but again, percentage moves are really small. So is the euro. And we're just seeing a bit of a jump in the pound here. But remember, pound has that big ceiling where you just keep rejecting that over and over. So we're just getting a lot of, back and forth price action without a whole lot of strong trend. Now we have the yen that's been trending lower, and I must say that's the one currency that's giving us some good percentage moves, and is also acting a lot more like what we discussed. All those rallies are getting sold, so those rallies becomes a very good opportunity to sell into. Now, looking at the percentage move so far, slightly higher, but this one is the only currency that I would say has been trending lower very nicely. In a nutshell, you can see that it's not really a good trading week because of a lot of back and forth and very small percentage moves. Now, when we take a look at broader markets, well, that's the same story. Take a look at S&P. They're mostly flat. Gold slightly lower, oil slightly higher, and really the big mover so far has been crypto. But remember, crypto had a pretty nasty fall in the last couple of months. So, big moves down, there's some big rebounds. That's what it is. But it doesn't really change the trend so far. Overall, I still don't like the crypto here whatsoever. Now, when we take a look at the movements here, you can see really the big movement was from the Bitcoin Cash. But outside of that, you can see that these things have fallen so much, and then they're bouncing 2.5-3%. So not a big bounce or a big move there. I do expect these rallies to be kind of selling off. So not a whole lot change there. Now, when we take a look at the market outlook, now the big question really is that, do we think market is just going to rally toward into the year end? There's one phrase you hear more often around this time of the year is a Santa Claus rally. Now, this year, market has actually done really, really well. Considering where we were back in April with all those tariffs, market's kind of holding it a lot better. I don't really expect a whole lot of change. We do have a resistance here. I mean, we might just hover around this area and kind of go back and forth for the month. Not really expecting a whole lot of selling because we are just not really a whole lot happening here. And if you look at the markets, economy, everything's kind of holding it a lot better. And this is where, the people are not really going to book the profits, below the year, before the year end. So a lot of taxation things comes in along. So that's why sometimes December kind of cruise along one way or the other. And then when it comes to January, that's where we start to see some big movements start to come along as the money start to shift from one place to the other. But again, December is just really going to be that period where, if you really want to look back, 2018 was the last time, like I remember, that's where, we had that big sell-off into the holidays. But after that, it's been mostly, the December has been mostly okay. Now, the other thing to talk about is the expectation for a rate cut. So one thing I did talk about is this whole timeline got distorted because of the shutdown. Now, we are having an FOMC meeting next week, and we still don't have the employment data that's going to be released a week after. Now, we had heard from the Fed members, and they're still leaning more dovish. And this is one of the reasons why we're seeing a 89% chance for a rate cut. So right now, that's just expectation. So if they do cut rates next week, I won't be surprised. Market won't be surprised because that's already priced in. Now, if they don't cut rates, now that is a bit of surprise factor, and that's where you can see some big moves. But right now, as you can see, a lot of that's priced in. Also, looking at the meeting for January, that's also expecting a rate cut for 65%. So one thing we have seen so far in the last 6 months is that market get ahead of itself. We see markets kind of start pricing in 2, 3, 4 rate cuts, and then suddenly the data gets better, or we start to see less dovish tone, and then all that has to reprice. So far you can see that we are back on that dovish outlook. So we are expecting more rate cuts this month and going into January. So that's one thing to pay attention to. But remember, when we get the rate cut next week, if there's a rate cut, what we are going to see is if there is going to be more consensus, like there's more dovish outlook, or is it more like cut a rate and then hold? So that's going to really swing the expectation for that, and for that primary reason, we have to kind of continue watching the U.S. dollar here. And this is why I think the dollar it's really a wild card here. It's not really the best trend. I think we have seen dollar move up very nicely and it's moved down very nicely. So we've seen movements both ways, but I think we have to really watch out for the Fed movements here before we can really decide if the dollar is really going to sell off from here. Now, when we take a look at the schedule here, as you can see that so far, it's been a moderate week. Really haven't seen big moves. We had the Swiss franc CPI that coming in lower expectation, but again, haven't really seen a move off of that. We have the services PMI stronger than expected, but look at the ADP employment report that came out negative 32. But when we take a look at the movements in the markets, take a look at the movements in the bond markets and the bond yields, well, didn't really see much because guess what? All of that is really priced in. Markets do expect the employment numbers to be weak, and hence we are looking for a rate cut, or expectation might be for a rate cut, or the dovish members that kind of really, kind of talks about that. We also had the Aussie GDP yesterday, and remember that came in lower than expected. I was really watching the Aussie last night for that, but the Aussie kind of really shoved off that move. So not really getting that big, reaction of these numbers here. I think the only thing that's really going to move the needle on things is the central bank itself. And remember, the RBA is still holding hawkish on their rate outlook. They're not really cutting. So that's really keeping the Aussie stronger. And then here we are with the RBNZ. They came out and they're also saying, well, we're not really expecting a rate cut maybe for the next couple of meetings. So, we're getting this hold on some of the central banks that's going to, keep a lid on some of the movements on some currencies. Now, we still have, we got the unemployment claims tomorrow. Don't really see a big mover here. And then on Friday, I think Fridays actually looks a lot better. We get the Canadian employment report. I mean, this one, they're still looking for an uptick in under the unemployment rate. Remember, we also have the Bank of Canada statement coming ahead as well. So, I mean, looking at next week, it's going to be a jam-packed week with a lot of events on the horizon. And again, another number that I'll be paying close attention to on Friday is a PCE price index. Remember, we haven't really seen a big uptick in inflation numbers. They are coming in more in line with expectations. So if this number comes in line with expectation, don't expect much. But remember, the big movements come when things are coming off way above or below expectation. That's really we expect a big move off of. But again, these are the numbers that we need to pay attention to. We don't really necessarily need to make a trade on that. But if we see a good price action, I think those could become a trading opportunity. Now, when we come to velocity, you can see that things are just moving across the board. But one thing we're noticing is that pound is on the stronger side. We are looking at the dollar on the weaker side, followed by the CAD and the yen. So this is where let's get into our trading view, and we'll take a look at things and see how things are moving along.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
And spot some opportunities. Now, this is where, if you have anything that you're looking at, you can also type in the chat box, and I'll take a look at that as we go. So let's just start with the broader markets. So this is something I talked about, recently, is this back and forth price action. Now, what does that mean? Where we get a sudden movement down, we got a big sharp rise up over here, a big move down, a big move up. So you can see that overall market's kind of fighting it. But if you take a look at where the gravity is, meaning that where is move kind of going towards, we're still moving higher. So what that means is that these dips are just coming to be a buying opportunity. We had a very similar instance this morning. I mean, we had some news about Microsoft, and you can see that this thing had a very nasty tumble. We saw the very similar price action when you take a look at Aussie. You can see that the Aussie kind of moved along with it. And here we are with the Kiwi. As you can see that we had to move along with it. But you can see that those are just turning out to be good buying opportunities. But in general, you can see that things are still holding it. The first currency that I want to talk about is the Kiwi. Remember, this is the currency that we talked about in the currency room. This is the one that I've been watching. We have the consolidation, and you can see that consolidation has been happening for the last few days. But we had a massive move last week off the RBNZ rate statement, and that really got us the trend towards the upside here. And remember, look what happened before. Every time we rally, we sold off. We rally, we sold off. Now we are pulling back and we're buying it off of that. So again, that's just a trend changing move over here. I still like Kiwi on the upside. Remember, if the market certainly pulls back, we might see a similar reaction, but you can see that overall, the Kiwi is doing well. So I don't like Kiwi on the short side. I think, if anything, Kiwi has a decent chance for running to the upside. Now, on the contrarian side, we are looking at the Aussie, and look at that. This thing looked like it was going to break out higher, and then here we are stalling it right up against that resistance. So first thing first, let's see what the Aussie Kiwi is doing. And this is where I find a little bit interesting. So this is one thing I've been talking about. I discussed that on Discord yesterday. We look for a trend-changing move, and you look for a lower high and lower low. So we did test that 50-day moving average, and pretty much since then, we're kind of holding it off of that. Now, why is this important? Because, take a look at that divergence that's been in place. Like look at this year, starting July and August and September. Like we have seen this this currency pair has hit the highest level in like last 13 years. So if this gives below this area, that's where I think we will see a divergence. Not only I like the Kiwi more at that point, but I also would like this Aussie Kiwi currency pair as well. And then using this little pivot high here for a stop. So pay close attention to Aussie Kiwi. I think it's kind of moving along, and eventually I think it's going to break to the downside. So that's one of the reasons why I do like Kiwi over the Aussie. Now let's talk about dollar, because this is another one that must say that this was a bit of a surprise, because overall it has been holding this level, and when we look at the move today, we just bring it down. So when I take a look at this little uptrend that really started, going back to early this year, you can see that things have kind of fallen off here. We are now downtrending below the 20, the 50. So question really is that, hey, is this the right opportunity to kind of short into? And right now you can see the trend has shifted. So the rallies are getting shorted. So I think the dollar likely to remain under pressure until we get a positive data, or we go into the FOMC next week. And I think based off that, so maybe we're just going to see a bit more pressure on the US dollar here. So I think dollar probably giving us a good opportunity in the shorter term to the downside. Saying if the dollar pulls back, so what happens to the yen? And I think this is where we talk about that correlation. As much as we really like, take a look at this movement here. Rally, shorted into, another rally, shorted into, another little rally, shorted into. This is a consistent shorting opportunity here. Now, as the dollar is weakening, you can see that the yen has kind of stabilized a little bit. So you really have to take a look at dollar yen to really decide if you want to go with the dollar or the yen. But as the dollar pulls back, the yen kind of takes a little pause over here. When it comes to European currencies, yes, you can see that this thing has broken that below that down uptrend here. But this move is just really small. We're just consolidating right here. So what can you do to really get your timing right on this one? And I think this is where, set some alerts, find out when things are breaking lower. And I'm just going to set an alert over here to notify us, like when is this going to break lower? Because so far you can see it's below the 20, it's below the 50. So the script has really changed for the Swiss franc. Remember, it used to be a good safe haven currency, and this thing today, look at it today. It did rise and then quickly pull back. So I don't like the Swiss franc to the upside. I think Swiss franc likely to weaken a little bit here. And when we look at the schedule, I think that's where it will actually be a little bit more interesting. But Swiss franc, I don't like it on the upside. So you really have to look at the trend to see, okay, which one do you really like in which direction? And when things are moving along the lines, that's where you want to be active. When they're going the opposite way, maybe it's time to kind of scale back a little bit here. You can see that euro is just not really going anywhere. Not interested in euro. And as we begin to take a look at pound, this is something we talk about. Pound is just a lot of back and forth. So we got a nice pullback here, getting a rally. I don't really like a breakout on the pound here at all, because you can see until it can really give me a confirmation, this resistance level has been a good shorting opportunity. So pound goes on the side list over here. We like the CAD. The story on the CAD, we liked it, but then here we are also weakening on that trend. So kind of put the CAD on the sideline here as well. So it really comes down to the Aussie and the Kiwi. And I think this is where the opportunity lies, is we can continue to see the money kind of flowing in there. So let's just pair things accordingly. let's take a look at the first one, Kiwi dollar. Now this thing, beautiful little extension to the move here. You can see a high base here, and then just breaking out. So at this point, this is going out of from a downtrend, turning into an uptrend. I do like further up strength in that one. So this is where, we can cast a little wider net. If we really like the Kiwi, question is that what do we pair with? And sometimes one currency is moving and sometimes other currency is moving. But this is where, you can diversify into some other positions where, Kiwi dollar looks good over here. Let me see what Kiwi yen is doing. And you can see Kiwi yen technically looks good as well. So this is where you can kind of diversify the risk a little bit. Instead of putting it all in one currency against the other, we can kind of cast a little wider net there. Here we are with the Kiwi Swiss franc. Again, very similar pattern, but you can see that, they are all kind of moving in one direction, but they're just going to move separately whenever one currency is having a bigger reaction. Even when we take a look at CAD, Kiwi against the CAD, you can see that this is very similar patterns across the board. So it's just really a matter of what we pair with, what other currency is really moving around that time. But I think there's a chance for Kiwi to extend a little bit, because remember, Kiwi has been one of the weakest currencies so far this year. So there's a chance for Kiwi to have a little catch up towards the year end. Here we are, Euro Kiwi also. They're all kind of having very decent, good setups over here. So I do like Kiwi across the board. You just have to go pair with exactly what's really moving. And then also, like I said, pay close attention to Aussie Kiwi as well, because if the Aussie Kiwi flips, then Kiwi favors more than the Aussie. Outside of that, you can see that not really super excited for some of the movements because they're consolidating. So the only thing moving right now is the dollar. And where can we find some support in the dollar? I mean, this is where we can draw some lines. So we can see a little bit more further pullback in the dollar in the next 24 hours. And then focus go on Friday when we get the inflation data and we get the consumer sentiment and so forth. But let me share with you, what's really on the horizon, because this is where, like I said, we need to plan things out. Plan things out to be what's more important in the next 2 to 3 weeks, so we can really be on our toes to when to be active and when not to be active. Now, if you really look at the schedule for, like I said, the last 2 weeks of December, what you're going to notice is that here we are, not a whole lot. And then here we are a week after that, not a whole lot. So those are the times where I generally don't like to trade as much. So really, the next 2 weeks is where all the opportunity is. Now, let's take a look at the next. Let's take a look at the next week first of all. Here we are with the RBA. We got Bank of Canada. We got the FOMC. We got the Swiss Bank. we got among that. Then we got some economic reports. Now, this is the week to be active. So this is why when you look ahead, it kind of creates the less urgency to be like, I have to be trading, because it's all about being in the right place at the right time. That's really where you want to be. It's all about quality over quantity of trades. Now, this week looks fantastic. Then you go a week after that. I mean, look at that. We got all this economic data along with Bank of England, and then we get the Bank of Japan. There's a whole lot. So everything is jam-packed into these 2 weeks. And after that, you can see just quiet. So now when we look at this, I have really no desire to be too active right now, where most of my trades are going to come in those 2 weeks. When we get the catalyst, we get the movements. And those are the times where you want to kind of, be more aggressive, be more active. And then when things sort of quiet down, it's time to scale back. So right now, as we look at it, you can see there's only 1 or 2 things moving. But when we go into next week, we will have a better idea on how some of these central banks going to announce. And then based on that, how currencies move. I think that's really where it's going to be the next big opportunity. So mark your calendar for those events. And really, that's where you want to be active. Outside of that, keep the powder dry. No reason to be too active until market gives you a reason to be active. So if you have any questions, let me know. I'll take a look at them as we go. Got a question about Aussie dollar with a stop at break even. So you're long Aussie dollar. Let's take a look at that one. I'm assuming that the Aussie dollar is probably looking very similar to the Kiwi dollar, but here we are with the Aussie dollar. Now, the big question really comes to is that what time frame are you using? How long you want to hold that position for? We already mid through the week. Are you holding it through the Friday? Because next week we have the RBA. So there's always that timeline that we have to kind of work with. But let's just say we're basing things on a 4-hour chart. Now, absolutely look pretty nice over here. Now, the next level of resistance is about this area. I don't think this can rise a little bit. I think it's going to probably stall right about 66.20. It's sitting at about 65.97. I unless we can really get a breakout on a Friday, I think we just have to watch out for this level. Now, if it clears at 66.20, now that's going to open up a lot more bigger window on that one. So it all comes down to the timeline. Based on how things are moving right now, you might want to be a little bit more aggressive with your stop, and let's just trail your stop. And as soon as that momentum kind of shifts around, and then you can just get out. But for now, I think yes, that's where the momentum is. But we have some resistance to kind of work with. And I think compare that to Kiwi dollar, this one, I think we have a little bit more room for this to run before it can really stall. So I think I like Kiwi dollar more than I do like the Aussie dollar. But I think right now, like any dollar current pair you look at, I think you probably see a very similar setup. Now, really, the big question is how long this, does it go in a very single moving line, or does it pull back lower here and then try to like reverse a little bit higher? Now, remember, the dollar is not it's going from an uptrend to a downtrend, but you can get some bear rallies between. We can really set up a tone on that trend. So, dollar, I would be a little bit more aggressive on my stop. I don't want to play it a lot more loosely. I would rather play it a little bit more tight. That's how I'm looking at some of the dollar pairs here. But yeah, along the lines, like I said, this is where velocity is, and you can see that beautiful move throughout the day. Now, if you ask me, is this going to continue tomorrow? Well, that's no idea on that one, because a lot of times, you can get a good velocity move for the day and it kind of dies off right there. So that's where you have to kind of decide, do I really want to be, kind of stick my neck out for this one? And am I going to hold this by the year end? Like, if that's not the answer, then you're just going for that velocity move. When you have good profits built in, time to take profits and kind of move along to the next one. But like I said, this is where, plan things out, because it's not about this week, but it's about the following week, the next 2 weeks. If we look at the schedule, as a lot of things going to come along the way, that's what you have to decide on which currencies, you want to be focusing on. And I would rather go, without expectation in, how those things are going to end, but then just look for, whatever is moving in that time. All right. Well, thanks everyone for joining. That's again, I'll be looking for, but, be active on Discord. I'll posting there when I see them. But yeah, let's just go with the schedule, and then we'll go from there. Thanks everyone. Have a good day.